Before you try to beat the stock market, answer one honest question. Are you ready to treat it like a profession, or are you just gambling between meetings? Because here's the uncomfortable truth. If you believe you can run your business, you work your job, manage real estate, and casually trade stocks, you are competing against people who do this 8 to 10 hours daily for decades. And that is not a game you win. Today, I'm going to tell you why most players lose in the stock market and why even smart, educated people underestimate what it really takes. If you're serious about building wealth the right way, subscribe now. I publish every single day. This is not motivation. This is a practical business and finance university. My name is Ravi Gabis, and welcome back to the Gabis Show, where we unlock the secrets of real wealth in the United States every single day. We continue talking about investments. Yesterday, we discussed emotional intelligence. Today, let's talk about something just as important. There are two types of people in the stock market: players and workers. Players believe they can outsmart the market. Workers understand that investing is a profession. Let me tell you my story. I entered the stock market at the end of 2008. It was a disaster year. For example, in Russia, stocks had fallen 80, 90, some even 95%. I made a list of companies that had dropped almost 10 times. If I had simply bought all of them and held them, I could have easily made 8x or 10x, but I didn't. I started trading instead. Buying, selling, timing entries. The first year I made 30%. I was proud, very proud. What I didn't notice that the market itself had doubled, some sectors even tripled. If I had just bought and held, I would have made much more. And this is exactly where that famous pattern appears. Beginners often win. Not because they are brilliant, but because the market is rising and they confuse a rising market with their own skill. I've seen this many times. For example, one of my students at the Academy of Financial Growth, where we teach financial literacy, started investing during the course. He bought Apple shares. In a short period of time, they doubled. He invested 100,000, it became 200,000. He was excited, proud, confident. He felt like he understood the market. And this is very dangerous period, because when you make 100% quickly, you start believing you are talented. You stop being cautious, you stop being humble, you stop respecting risk. And very soon, Apple reminded all investors what the market can really do. The stock corrected sharply. And many people who felt like geniuses suddenly felt very different. This happened to me too, just in a slower version. After my 30% year, I thought I was good. But second year, only 7%. I was disappointed. But here's the thing. I was not a player. I was trying to be a worker. I took 3 or even 4 professional investment courses at my brokerage company. I had a personal consultant managing my portfolio with me. I was part of an investor club that met weekly. I was studying, I was analyzing, I was working, but I underestimated something very important: how much work is actually required. At the same time, I was running my own company. I had multiple business lines, real estate projects, a microfinancing company, an online shop, and I believed I could combine all that with serious trading. That was my mistake. Then came the third year, a correction year, and I lost 25%. That 25% erased everything I had earned in the previous years. I remember one specific day. I deposited $3,500 in cash, what I usually did. When I came back to my office and opened the trading app, that money was gone in minutes. And later, I calculated something painful. Over 3 years, I had basically paid about $500 per month for my stock market education. Not the worst education, by the way, but expensive. That was the moment I understood something very clearly. Even if you are intelligent, even if you study, even if you take courses, if you are not fully committed to this profession, you are competing against people who are committed and they will win. Trading is not something you do between calls. It's not something you do after dinner. It's not something you do when you feel inspired. It's a profession. Minimum 4 hours a day. Deep research, market reading, management, technical analysis, emotional discipline, and even then, no guarantees. That's when my strategy changed. Not from player to worker, but from overconfident worker to strategic investor. Now my goal is not 50% returns, not 100%, not gambling, consistency. If I make 10 to 15% per year steadily, that's enough because of compound interest. That's where the real magic happens. Many beginners chase 30%, 50%, 100%. They want fast wins. But wealth is not built by spikes. It's built by consistency. 10, 13, 15, 11, year after year. Because compound growth turns stability into power. If you try to save your way to $1 million, it will take forever. But if you combine disciplined investing with long-term compounding, capital builds itself. And this is the difference between excitement and system. By the way, if you want to understand how to build an investment system that works long term, there is a free webinar link in the description below. I go much deeper into strategy, structure, and risk control there. Tomorrow, we will continue and break down compound interest, the real engine behind long term capital growth. See you tomorrow.